I worked as a bank teller as my first job out of college after receiving a bachelor's degree in finance. I did not realize that a major part of my job responsibilities as a teller was to sell customers products and services and book appointments with the bank partners like the financial advisors. So today I'm going to share a bit of that experience so you understand why exactly it is that you should not be buying investments from a bank financial advisor. So as a bank teller, you can see inside every single person's bank account. So as they approach the counter or the drive-through, bank tellers are pulling up your account and trying to figure out what you don't have that they can then sell you, whether it's an auto loan, a credit card, or book you an appointment with a financial advisor or a mortgage officer or something like that. If somebody had around $10,000 or more, this signaled to us that they could be a potential referral for our financial advisor. So the first time I saw a girl in the drive-thru and she had her $10,000 in her account, I was very nervous, but I just asked her what that money's for, and she said she really didn't have a plan for it. So I suggested that she come in and sit with our financial advisor to talk about some options. She took me up on it and I was so excited. I was getting my first sale, doing a referral. Then afterwards, after the girl left, the financial advisor came over to the teller line and he was like, "Ugh, what a waste of time." So instantly I was crushed. I was like, okay, sorry about that. He's like, yeah, $10,000. I mean, you can't really do much with that. So I just sold her a fund. I really had no idea how any of this investing thing worked, how commissions work. I literally did not know anything. I didn't even know what a financial advisor was or understood it. So at that point, I was very naive. And to me, $10,000 was good. Like, I did not have $10,000 in my bank account at that time, not even close. And so I was thinking that was a lot of money. And to me, it was. And to her, it probably was as well. But you quickly learn what advisors are looking for, and not all advisors. Like, there's so many good ones. I was a good one. There are I've met really, really great financial advisors, but there are those advisors that are just kind of like doing it for the commission. And unfortunately, it happens too often when people are not aware of what's going on. So I'm trying to raise some awareness here. So let's get into this. There's a few big problems with buying investments from a bank. The first problem is the limited access to funds. A lot of banks just operate with a certain pool of investments versus having access to index funds, ETFs, and everything out there. These investments tend to have high fees associated, which is the next problem. So if you already bought something from a bank, take a look at this video because it shows you exactly how to calculate and find the fees that you're already paying. So you can make sure you're not getting ripped off, you are in good quality funds that are low cost and good performing. The other major problem that happens is when clients that have lower balance accounts approach a financial advisor, and this doesn't just happen at banks, it happens at brokerage firms too, but advisors typically work on an asset under management type of fee structure. So if you have $100,000 invested, 1% is a typical fee that financial advisors charge. So that means you would pay $1,000 of your $100,000 to your financial advisor for them to manage your account. If you have less than this, it's really hard for a financial advisor to justify spending time with you because it's just not worth it as far as income for time spent goes. So people with less than that are limited in their options when they're working with advisors because advisors will then sell them higher fee funds. Of course, erode into what you have to invest. So if you have $10,000 like that girl had, I'm not sure exactly what he sold her, but let's say he sold her an A-share mutual fund. That means she probably paid about 5% to get into the fund. So she would have paid about $500. And then from there, financial advisors don't have any more responsibility or relationship with that client. They're just sold their fund and are on their own, basically. So let's get into what to do instead of working with a financial advisor at a bank. There are tons of options available online. Some that I highly recommend are SoFi, Fidelity, E-Trade, Charles Schwab. All of these places are brokerage firms. Some of them have banks connected to them, but they're not like the banks you see out on the street. When you work with a brokerage firm online, you can pick your own investments. You have lots of access to anything that you need, and you're not going to get stuck with somebody else trying to convince you to do something at a high fee. So if you need help investing your first $1,000 or $10,000, take a look at this video next. And in one of my next videos, I'm going to be sharing exactly how to choose your investment firm. I know I just listed a bunch there, but I've got a specific process for you that you can catch. So be sure to subscribe if you're new here, and I'll see you on the next one. Bye.